coming back to you on the program. Let's get back to the top story today as we're getting it within the last hour. The Kuwaiti oil minister, Issam Al-Mazzouk, says Nigeria and Libya have been invited to the July 24 meeting in St. Petersburg, Russia, to discuss the future of OPEC and the world of oil markets. That's the news this morning. And of course, it's been hinted that Nigeria and Libya may be asked to cut back on oil output. According to Bloomberg reports, the two countries in Africa has been asked to step forward and tell the meeting how, if they are able to stabilize their production at current levels. We've seen Libya and Nigeria's oil output come back very strongly. Nigeria producing north of 1.6 million barrels per day. And this is going to be some very upsetting news for Nigeria as we speak, looking at oil prices below the $50 threshold. Since January, Brent crude was down almost 20%, about 17% so far year to date, and trading 46.91 early today, up by about half a dollar or 50 cents specifically. This morning, this story is coming through, and Nigeria may be asked to step forward. Meantime, the Secretary General of OPEC, Nigerian-born Mohammed Bakindo, told reporters in Istanbul that given Libya and Nigeria exemptions, quoting Bloomberg report, to production costs was a collective decision, and any proposal to include them in OPEC's plans will also require a joint decision. The meeting in St. Petersburg in Russia on the 24th of July is not that formal meeting. So it looks from this statement that Bakindo is a little bit away from the statement from the Kuwaiti oil minister, hoping that Nigeria and Libya will remain outside the cutback until March next year, or perhaps until November 30, when OPEC next meeting takes place. All members agreed to extend this cutback until March 2018. The market was upset when that extension was made in the month of May, and the price of crude went down. Of course, no thanks to the United States ramping up very rapidly on its own shale gas output. The U.S. President Donald Trump saying about 2 weeks ago that the U.S. will flood the world with its own energy products, making deals with its friends and allies. Let's come back home very quickly. Take a look at where we are as far as the oil and gas stocks were concerned. 1.75 on the index, back in the red territory last week with a bit of a decent volume across the big seven. Corn oil lost 9.74% on the back of about half a million shares. That's 499,745 units for the week. 40 oil lost 1.42% on that volume of shares, below 50 naira per share, 48.70. Mobile was unchanged at 236. MRS 37.30. Owando a plus of 3.92, but that was not strong enough, including Seplat 0.43%. But the big story this morning has to do with the oil and gas. The Nigerian government says it's looking to unbundle about 20% of its stakes in petrochemical oil and gas companies, in which is a government firms on the stock exchange. That's one news from the BP last week. Let's chew that over with the latest statement from the Kuwaiti oil minister regarding Nigeria's and Libya's coming back into the production cutback. Dolapo Oni, head of energy research at EcoBank. Good morning.
Hi, Bosin. Good morning.
It's good to see you. Let's start from this upsetting news early Monday. What's your reading of this statement from the Kuwaiti minister? Meantime, Bakindo seems to be a little bit disagreeing, not really, but says, well, the last decision was collective at an OPEC meeting. July 24 meeting in Russia, is it that same meeting that could get Nigeria and Libya into the barber shop and shave them a little bit?
Okay, you know, I mean, some people would call this an early sign that OPEC is not exactly together because it's like two conflicting statements. But if you really look at behind what's going on, the Kuwaiti oil minister, who is actually the chairman of the compliance committee or the monitoring committee that monitors how the OPEC cuts are going along, said, look, essentially what we have to do now is we have to ensure that Libya and Nigeria do not produce beyond a certain point. So in essence, it's not really a cut as much as it is actually just a cap. saying that, okay, Nigeria should stop at 2.2 and Libya should stop at 1.2. And at that point, they feel you guys are back to where you used to be before, and you really shouldn't pump more oil on the market. And that way, we'll still be able to ensure that the OPEC cut compliance still remains maybe around 96% or at least 100%. Or at most 100%, and that's what he's pushing for. But Bakindo is saying that, look, maybe this is not yet the time. In my view, the way I see it is, how much can capping Nigeria and Libya's oil production actually help the situation in the oil market? I don't think it can. If you look at what Shell is doing in terms of production, I think there's still a long way to go to really achieve post or $50 oil prices.
In terms of where we are, whether Nigeria ramps up to 2.2 million barrels per day or not, the oil market is already sweating around the collars, as it were, because United States and President Trump looks very ready to spread U.S. oil around the world at low prices, and he seems not to care so much what happens to OPEC or Russia.
Yeah, exactly. Because again, if you look at Shell, they've got a lot of support. In recent weeks, they've raised equity, or in recent months after they've raised equity. A lot of their oil is also hedged already. When oil was at $50, part of the wise thing they did then was to quickly hedge their oil. So a lot of them have a lot of their barrels hedged at $50 oil. So they are quite steady right now in terms of where oil prices could go. And again, because technology has helped their break-even price also drop significantly, they are able to stay in the market even up to $35, for some of them below $35. And then lastly, you also think about the fact that it's also beginning to make some sense to move American oil all the way to Asia. Before, the distance meant that the freight cost, the old transport cost didn't make any sense to be transporting oil from America to Asia. But now we've seen some movements. Trafigura has pushed some, Glencore is pushing